Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I'm Arjun Patsarthi, and RBI's policy meeting is coming up for review tomorrow. And our market is expecting RBI to hike rates, widely expected. But the question is, will RBI hike rates much faster than expected? Before we go into the full bond bites, do not forget to download our app, Quick Invest by INR Bonds, for the best bonds to invest in times of high inflation, RBI rate hikes, and a high risk aversion. And the bonds come to you with a huge amount of information, transparency in prices, and the most amount of the best in-app investment process, right? And this quick invest is available for download in iOS and Android.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.
Back to the highlights. RBI policy tomorrow is expected to hike rates by 75 basis points. INR bonds, as always, is hosting its webinar on overlook of debt markets post the RBI policy and inflation and global central bank rate hikes and where to invest in fixed income. It's on Friday at 4 p.m. So do not forget to register for the webinar. That webinar registration link is in the description here. In 10-year G-Sec yields went up while Sensex Nifty fell in anticipation of rate hikes. The rupee was flat as the markets worried about RBI intervention, while US Treasury yields again rose over 3.02% on expectations that the Fed will have to hike rates much faster than expected to quell inflation expectations globally. Thank you very much for listening in. Do not forget to register for our webinar for Friday at 4 p.m.